Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only and wonderful Anna Kelly. How you doing today, Anna?
I'm doing great. Great to be here with you, Michael.
Absolutely. So we are in interesting times where inflation is the topic of the day, as it should be. It's obviously top of mind for the Fed. We got a bunch of billionaires whining and complaining on TV. And this morning we got PPI, which I will summarize in a second, but CPI is the game changer tomorrow. So when you think about PPI and CPI before we get into the numbers, how do you break those two down for our audience?
Sure. So CPI is what most of you see in the headlines every day. It's the consumer price index, right? PPI is the producer price index. So typically what we see is if the producers show a rising increase in their costs, usually that will translate also to higher CPI in the following metrics that what are released. So I expect, because PPI is up today, that CPI is most likely going to be up tomorrow as well.
So I'll just give you the PPI numbers because they just came out this morning. We'll do it this way. Last month, PPI headline was 8.7. Expectations for the month were 8.4. Actual was 8.5. So if you are a glass half full kind of person, you could say PPI continues its downward trajectory. I believe headline peaked at over 10%. It actually might have been 11 in March. I don't remember. But anyways, you can say if you're a glass half full, it's coming down. If you are a glass half empty, inflation once again surprises to the upside. Is that kind of fair?
It is. And it's really hard to know because, again, the producers' prices going up doesn't necessarily mean that consumers are also consuming just as much. So as consumers stop consuming as much, as inflation is worse, as we fear of recession, it's possible that PPI could go up and CPI could come down. So it's hard to predict for sure. But generally speaking, I've seen the CPI numbers track pretty closely to the same type of trajectory that the PPI number has gone, until it kind of breaks at some point. So I expect that we're probably going to see above expected inflation, but still an inflation number that is coming down nonetheless.
So CPI tomorrow is going to move the markets. It's kind of,
yes,
frankly, what everybody's been holding their breath for all week. Just to give you the numbers and then give you the expectations, because this is going to move. This has the potential to move the market pretty significantly. So just to catch everybody up on what happened last month, headline came in at 8.3. That was down from 8.5. So again, headline continuing down. Headline was down mainly because gasoline, and we're releasing all this oil from the Strategic Petroleum Reserve. But nonetheless, headline was down. Expectation is headline will continue down again this month. That headline will be 8.1. There is hope that it may have a 7. I think that's just a hope. But again, headline, I think generally speaking, will be down again because if you take, the one of the two largest components and you add supply, guess what happens? However, core inflation is something, Anna, that I waved the red flag on last week because I thought, or last month, because people were underappreciating it.
Right.
It was expected to be 6.1. It came in at 6.3 and it started its upward movement. So again, it stopped its downward. This month, I was really shocked to see that the talking heads, the experts, actually are forecasting 6.5. So they think core is going up, which terrifies me. Right. They usually are glass. They're usually like it's going down, but now they think it's going up also. I'm a little nervous because it's all about core tomorrow, in my opinion.
Yeah, I am too. And we've been talking about this for a while, right? That the key is that the primary things that drive households to have to spend are energy, housing, transportation, and food. And none of those things are really slowing down. I mean, energy, to your point, took a little bit of dip, but then OPEC announced last week that they're, kind of halting the amount of oil that they're going to release. And we're not producing anymore either. So as we move into the winter months, especially after, gas and oil are hit hard, and they're needed in the Northeast and in many, many countries for heating, I expect that those costs are going to rise just as it's starting to get colder. And the food shortages are not stopping. housing rent is still going up. And we've talked a little bit about how CPI kind of underestimates the housing inflation because it's just the way it's calculated isn't reflective of real time. But landlords are still raising rents because now we're being hit with tax bills, in addition to increased costs of lawn care. Snow removal is a big thing in the Northeast you don't have to deal with, but it's going up exponentially, and so I expect that, core CPI is going to be more challenging, even through the Fed raising rates for the next several months into the foreseeable future.
Yeah, when I think about core and what was important last month, they're still important this month. You're absolutely right. Cost of housing or owner's equivalent rent has been underreported.
Mm-hmm.
There's a lot of people hoping that, hey, rent's getting softer. Well, again, remember, owner's equivalent rent has a 6-month lag. We still got to pay the piper on that. Again, I think wage inflation has just started. Again, I think eventually we have real wage growth, not just nominal wage growth. I don't know if you saw this, but the Department of Labor came out yesterday with a ruling that could potentially impact the gig economy at Uber, Lyft, DoorDash, things of that nature, taken from contractors to employees, which again is probably great for or I should say it is great for the employee. But as consumers, let's not get it twisted, our costs are going to go up to cover that. So
Right.
again, all of these wage growth is awesome for the individuals and their families. It's awesome, but realize just like the 70s, part of that ramification is prices will reset at higher prices. And that's all about core and core is going up. And again, on headline, to your point, I think this is the last month headline goes down. I think we've been talking about all summer, kind of the summer rally, and there's generally the world economy is weaker, so demand for gas for cars is coming down. But we're going to head into a winter. We should all hope, we should all pray for a warm winter, if that's a thing, a light winter. Otherwise, it could get really expensive, and headline can scream higher again.
Right. Absolutely. There's so many factors that are unpredictable that continue to make me go, oh, wow, didn't think of that. Even though we think of a lot, there's things that happen. So it's really hard to predict, month after month. But I think that over the winter, we're going to have a real challenge. And, the fact that wages haven't yet really come down, the layoffs are just starting. But to your point, that wage price spiral is a real thing. So as wages go up, consumers, basically producers are going to charge more. Consumers are going to spend more for a while because they feel a little wealthier because their wages are going up. And it's funny, if you read the headlines, there have been surveys basically that have come out and asked consumers, how are you feeling? And shockingly, some of the surveys say they're feeling better because they just got a raise, right? So if you have a job, you might feel like you're doing a little bit better. You're not really necessarily accounting for how much has my food gone up. They feel better because their wages are up and their oil is down. But the reality is it's feelings are very finicky and they don't often reflect what's really happening. So it's hard to see month to month, but I think we're in for probably another quarter through the winter, maybe 6 months. Most forecasters, whether they're right or wrong, are saying we're in for a very, very cold winter, right? And so I expect that, especially in the Northeast, where a lot of utilities are actually paid for by the landlord, your housing costs are going up significantly because of energy.
Yeah, and they kind of rounding this out. Why is this important? It's because the Fed will be looking at the numbers tomorrow. Obviously, I think they get them this evening, but if they haven't got them already, but they'll be public tomorrow. It'll be all the talk track. It'll be, are they going to bang us with 75 again on November 2nd, which I think everybody thinks coming. They're going parabolic with rates. I think they're going to get what they want, which is higher unemployment. I think there's just a lag. I think unemployment goes up noticeably in Q1. I think we get through the rest of the year kind of certainly sub 4%. But I think there is a price to be paid from taking rates from 0 to 4.5 in a year. It's just, as you and I know, there's such a lag in the impact of what's going on.
Absolutely. And the Fed themselves said it's going to take about 6 months for them to see the effect of their first rate hike, right? So this is not something that Fed raises rates and the problems are fixed and the stock market should go crazy. That's kind of what the stock market's done. It's like, oh, we're waited with bated breath to see, does it go up or down, 0.1 or 0.2%. But the reality is this is going to take some time, which is why Fed has been so hawkish. Every one of the Fed governors, Powell, they're in lockstep saying We will tackle inflation. It's our number one issue. And what I think a lot of people miss, Michael, is in that last press conference that Powell gave, he very clearly said, we don't expect to be able to bring it down to 4 for a year and a half, maybe get it down to 2 in 2025 at some point. So those that think that if the inflation numbers lower, the Fed is going to back off next month, I'm sorry to tell you that's not going to happen. This is their number one goal. They know they might break something. They know this will push us into a recession. They're going to continue rate hiking despite what you might see as a small up or down in that CPI number tomorrow, in my opinion.
I agree with you 100%. Anna, where can people find you?
You can find me here every week and on my playlist on your YouTube channel. You can find me at social media at Anna Kelly, REI Mom, and my website, reimom.com.
Thank you so much.